Selling, general, and administrative expenses, or SG&A, consist of the costs associated with selling a firm's products and the costs incurred in running the firm's daily business operations. The company reports its SG&A on the income statement. Paul's Pastaria is a family-friendly Italian restaurant. Its selling costs are those that can be linked directly to the sale of a plate of pasta. These expenses could include the cost of producing and running an ad about the restaurant's new pasta special on local television stations, and of printing and mailing out Paul's Pastaria discount coupons to nearby households. Paul's general expenses and administrative expenses can't be directly linked to the sale of a plate of pasta alone, since Paul also sells pizzas and salads, but these costs must be incurred to make those pasta sales. General and administrative costs include his cooks' and servers' wages, building insurance to help him rebuild his restaurant in case of a disaster, and the restaurant's phone, internet, and utility charges. SG&A does not include the costs of pasta, ground beef, tomatoes, salt, pepper, or olive oil. These expenses fall under the costs of goods sold category. Why should Paul care about his SG&A? If the amount is high as a percentage of sales or as a percentage of net income compared to the amount similar restaurants are spending, he might be spending too much money on SG&A and hurting his bottom line. While Paul won't be able to examine the SG&A expenses of other small, private, independent Italian restaurants like his, he can look at those of publicly traded restaurant companies to see if his spending is in the ballpark. Ideally, Paul wants his SG&A to be as low as possible while maintaining a high level of pasta sales.